Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. As widely expected, the US Federal Reserve kept rates unchanged on Wednesday but have reaffirmed its commitment to battling stubborn inflation. After 15 months of increased interest rates, Federal Reserve policymakers kept their benchmark rate steady between 5 to 5.25. However, the central bank did hint it may raise interest rates 2 more times this year, as much as half of a percentage point or 2 25 base point rate hikes. US Federal Reserve Chairman Jerome Powell said the pause was out of caution to allow the central bank time to gather more information before determining if rates need to rise again. Looking at the Australian dollar pattern, we can see the market challenge that topside level around 68.20 and not quite breaking it. Still feel the market is a little bit to the overbought side, or more to the fact extremely overbought, and therefore does warrant a pullback, which could be anywhere towards 67.45 to around 66.80.90 and reassess from there. So with the US Federal Reserve rate decision in the rear view mirror, we now turn our attention to the European Central Bank ECB monetary policy meeting this Friday, which widely expects a 25 base point rate hike from 3.75 to 4%. As you can see, the technicals are a little bit to the overbought side. Now, more to the point, the dollar index, which measures the greenback strength against a basket of 6 major currencies, took a stab at that key level of 102.60 overnight, but rebounded and closed at 102.90. If we do see further pressure to the downside to the US dollar index, then a break of 102.60 could ignite further moves to the upside for the euro and beyond 108.60.80 and maybe even up towards the region of 109.40 to about 109.90. So let's just bring this up to around 80.90 area, and then we've got a bit of a guidance in terms of that. But with the technicals overbought, does limit the upside potential. The whipsaw price action for dollar yen continues, but still maintains a bullish stance as it flirts around the 140 handle. I do feel there is further upside potential, at least towards 141 to 142 as initial target, and reassess from there. With any pullback, the bullish call still is viewed while we maintain above 138.65.80. Sterling still not backing down, however there is still bearish divergence, but the ADX is trending, but the market is still a little bit hesitant as it challenges this topside around 126.65. I'm not getting overly bullish at these levels. I feel the market is a little bit overcooked and therefore do expect to see a pullback, and with the divergence there does support this case to 126.15 to around 125.75. Gold still remains weak and now getting to that level, which is a confirmation of 1,942 to the engulfing candles that are holding. Now, close under there would give further indication to the bear case and look towards the region of 1,928.33 or extending to 1,916.18. My broader call, though, is still 1,850 with limited upside, with the cap seen around 1,957.58. The upside challenge was disappointing for the bulls and now still keeps very much on track to a downside challenge. Since the break around that 69.5 has supported the call to $65, figure 25. I feel the market's upside potential was very much disappointing from the stab and therefore does weigh with the technicals still negative and therefore keeps that downside call in place. Well, that's a wrap for the day. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.